see. Okay, cool. So, all right, let me just go back to sharing. All right. All right, so my name is Gio Bencourt, and today we're gonna, every single day, Monday to Friday, we start doing a daily US pre-market analysis, and I'll get right with it for today's. Okay, so real quick, let's do part of the disclaimer. The information, context, opinions which are expressed in the presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade, and Vantage does not guarantee the accuracy or reliability of the information provided herein. That's our disclaimer about me. So I'm Gio Benacourt, a senior VIP market analyst, market educator, and demonstrator of strategies with Vantage, bringing over 20 years of experience. And I'm a holder of CS Series 3 license and a CMT candidate. All right. Take a look at the agenda for today. We're going to be looking at the economic calendar, what's moving in the markets, identifying key support, resistance, and levels, and trading with Fibonacci tools. About Vantage, now we offer over 1,000 instruments, over 100 chart patterns, drawing indicators, tools, and whatnot. What we stand for: lightning fast execution, award-winning 24-hour support, intuitive tools, and global connectivity. Okay, so I wanna talk today because I think it's important that we have a shared common vocabulary for what is technical analysis. So let's dive right in there. Is it just a form of data visualization? Obviously, charts, charting, they all display market data in lots of different data visualization modes. It's a big part of where technical analysis come from. But you got to go back hundreds of years to the rice pits of Osaka, Japan, and look for a gentleman named Monohisa Homa, who invented the Japanese candlesticks as a way to try to capture all of the behavior of traders in those rice pits. And we've, of course, advanced the discipline over 100 years, over hundreds of years, and there's lots of different chart types. But what I'm going to argue today to you now is that technical analysis is far more than just collating data and displaying it in a way that we can interpret a lot of information quickly. That is part of it, but if you look at the definitions from some of the very early texts from the 1920s, 1930, guys like Edwards and McGee said technical analysis is about the study of the market itself, all of that price action, all of the investor behavior, everything that's happening in an open, freely traded market is part of our discipline. And I love that definition because it is quite broad, and hopefully through today's session, you'll understand just how broad and the depth of study that you go through. All right. We also know the technical analysis is a study of that supply and demand relationship. We care a lot about the behavior and the psychology of investors. That is one of the hardest things to quantify when you're thinking about investment decisions. So I'll argue that is all represented in this beautiful little element called price. Okay. And, we obviously come to think about the last definition. I'm going to pick on a widely cited authors, Perry Kaufman, who says it's a systematic evaluation. And systems, obviously, is the reason I bring up this quote. It's a lot of us have heard about algorithmic trading, high frequency. You might be even be an advanced programmer. You might know Python or R or many other languages, and that is important. It's an important way to express some of the ideas. But even if you are not a coder, you're not an algo trader, you should be thinking in terms of systems. a rules-based, repeatable approach. And that's something that was obviously, hold on for a second. Good. Sorry. All right. And that is obviously something that was, hold on for 1 second. That was drilled into me when I went through studying 15 years. And I spent a lot of time surrounded by some of the best money managers in the business, is that they have a defined, repeatable process or a system that they follow no matter what the market is doing. All right. So I'm going to take you back to some, basically, some economy 101 class. Hopefully nobody's having PTSD from their university days. But remember, at a fixed rate of supply, an increase in demand is going to move up the price equilibrium, or a decrease in demand will move price down the equilibrium. So when we're thinking about an open, freely traded market, demand, greed of investors is inherently pushing prices up, and fear or selling pressure is going to push price down. Now, we've heard about this scenario, FOMO, fear of missing out. So that is basically all to tie together. Now, I want you to hold that thought in your mind, because it is perhaps one of the most important parts of the magic that we're trying to unlock here, or the message of the market that we're trying to decode, which is related to learning that if you take emotion, the could be or the should be out of your decision making, and if you look at just what is happening and you can quantify that, you have a big advantage over most humans. And I want to bring that quote because that quote was given by John Henry. Okay, so I will argue for all of us that in the investment discipline, there's a lot of emotion tied to those trading decisions that we make each and every day. And those emotional impacts on our decision making can be very negative. So the more you can remove your emotional and cognitive bias from your decision making, the better chance you have of staying on the right side of trends. So let's talk about how to do that. Okay, so let's take a look, starting with a basic chart of the S&P, a daily chart of the S&P. We can easily see, we can simply eyeball this chart and see that from early on, the market had done an uptrend, right? Had done an uptrend, created a high, and then pulled back, made a low, and then continued its trajectory higher. So basically, the market was making higher highs, higher lows consecutively, and that is a basic 101 of an uptrend. And it did do a pullback or a retracement and in 2 days. So now we're sitting in August, okay, and it appears that we are in that continuation of that uptrend. So we could draw those trend lines, again, identifying those series of higher highs, higher lows to see when those trend lines are broken. And it's a very classical pattern recognition. This is the kind of stuff that Edwards and McGee were doing back in the 1920s, before there was computing power of any kind or any automation for charts like this fantastic visuals that we see in here. Now, it's great to be able to see retroactively, right? We can draw trend lines on history of price action, but it's not very forward-looking, and how clearly this uptrend emerged when we were down in this highly volatile market. Now, large range washout that happened at the beginning of August, and now we basically from this particular from this particular movement, we can count yesterday 1, 2, 3, 4 days trying to recover what in 2 days the market did. So, a lot of investors might look to some tools from technical toolkit to help us identify when a new trend begins. And what I'm gonna put on now here is a chart, and on the chart is called something that's called Dungeon Channels. So if you got a chance, you should read some books about the turtle traders. It's a great experiment in the 1980s. Richard Dennis thought he could grow traders from nothing, people who had no experience. He could teach them how to trade futures markets in Chicago, and he was very successful. And Dungeon Channels was one of the original turtle traders from that experiment. And dungeon channels were one of the main inputs for the entry system to new trades. So basically, all of the dungeon channel do is a prior look back period. Okay, we see if the current price is setting new high or a new higher low. So the upper line, the green line, is moving up as prices continues to make new highs, right? And the red line is moving up as well to make new higher low. So in this essence right now, the red line is flattish at the end and it's flat on the top also. But if you look at the period look back, we'll see how the market actually hit that particular line. So when the red line also projects higher, where it identifies those swing lows. So it was just a easy way for them to identify these movements. So very simple tool, but we are automating instead of being subjective about when we identify those breakouts. And you can see, and you can set the look back periods as long or short as you would like. But that's one tool that you could use to automate the decision making about a new trend emerging. Of course, we're not going to use just dungeon channels. I'm sure for everybody on this call, you know about moving averages. So let's pop out a moving average. The yellow line is a 20-day moving average. Okay. So really, you don't see charts that don't include moving averages. It's almost not considered technical analysis because it's so prevalent. But I think this is one of the most important parts of technical analysis, which is to look at the history of price action. And if where we are today is higher than historical average, that's inherently bullish. So here we are, we can see the price breakdown through this 20 day moving average as after price made that high to our left, and then it just price broke down and it crossed our moving averages. Strong momentum, strong volatility that we're seeing here, right? And then price actually was able to break above that 20-day moving average, and that's a signal. That's one way that we can decide that this price action right now relative to its historical average is positive or bullish or constructive, right? We can also look at the slope of the moving average line and all of the rest. Now, for most folks, if one moving average is good, 2, 3, 4, 5, even 10 moving average are even better. Now that's the benefit of having two moving averages, that we could identify periods of crossovers. So I've got a shorter period here. You see, let me go back. All right, so the white line is a shorter period, and when you see crossovers, so when the shorter period moving average, the yellow line breaks below the shorter white line, that's a signal. We can program that. We can use that to our advantage. And that current price action is pulling these moving averages down, right? The shorter period is crossing below the longer period. Similarly, a re-entry point might be when the shorter period moving average breaks back above the rising period. And we can notice that. And when we were to notice that's a signal right there. So price action in this region was already telling us there was some improvement, but we're still obviously now on this last candle, we are above our averages. So can we contemplate a momentum to the upside? Can we say that there is volatility being incremented? Well, that could be the case. So now let's take a step further. And as we're building a checklist, we're trying to remove our subjectivity, and we might use a couple of other tools. So is anybody familiar with Bollinger Bands? All right. If anybody's familiar with John Bollinger, the Bollinger Band system, and what John was trying to understand in the early 1980s was that volatility was not a fixed number for any security. In fact, it fluctuates. And so we came up with this idea of volatility compression and expansion. So we wanted a tool to help us identify extraordinary price action to highlight the areas that we should be paying attention to. We set a 2 standard deviation band away from the average. Now, 2 standard deviations in a normally distributed data set is going to be about 95% of the data. So my market price data is not normally distributed, but that's for another lecture. What we do know is that it's very significant when price action is moving outside these bands. when price action is below the lower Bollinger Band. That's extreme. It's beyond 2 standard deviation. That tells us some information about relationship of current price action to what has happened historically. And the way John will encourage all of us to think about Bollinger Bands is that from volatility compression, these bands narrow. We're going to find when that breaks, volatility expansion, either to the upside or downside. We have to watch which direction price breaks. In this case, we're seeing that the price is looking to break above. It is breaking out of the medium, out of the medium line, which is a 20-day moving average in the Bollinger Band. All right. So I'm going to add a couple of more price pieces to this checklist. Now, we know from Charles Dow, the first confirmation indicator we have that's non-price, but helps us confirm trends is volume. And volume is an incredibly important subject matter in the curriculum. We know that volume can help us understand that there's a washout happening here. We can look for enthusiastic participation to the upside of trends to know that there's support for that move, that there are still more buyers, that there's more activity happening, and on and on precisely on a chart pattern called head and shoulders. When the right shoulder is being formed, you want to be able to catch and see that low volume is being built. So you have that particular movement, that there's low volume being built on the right shoulder. And so that means that the trend of direction is happening. So if the head and shoulder comes after an uptrend, then the head and shoulders shows us or identifies that there's going to be a trend direction change. So that's why you want to take a look. Keep in mind about obviously the volume. All right. So we also see that the one last thing that I want to show you about the MACD moving average convergence divergence indicator is, and its momentum and trend kind of all wrapped into one. And we are using exponential moving average to calculate this. The point that I want to make here is that if you're trying to get away from emotional and subjective bias, you can use mechanical and quantitative tools to make your decisions for you. Now, what I will encourage all of you to do is not complicate your charts, as all is not done it over, right? Understanding how the MACD works will help you control those emotions. So as I have started to do here, looking at the chart, we have a very, very, it's a lot of things that we complicate our decisions, but you want to keep it as simple as possible. So we have more and more indicators to the price panel, and we're going to obscure our ability. We're going to create analysis paralysis. At the end of the day, by side practitioners have to make an investment decision, and there are tons of decisions that happen even after you've done this analysis. So the position size was coming out of the portfolio to allow that to come in and on. But the point that I want to make is that our checklist, these tools are all showing bullish signs. MACD is above signal line, then crossover is above the medium, the 0 line, got positive in the histogram, and we got a moving average crossover onto the upside, a Bollinger Band break. The Dungeon channel is making new high, so we can check out a list and say all of the bullish criteria in our simple checklist are being met, and that helps us make a more responsible decision looking at the weight of evidence. It's not emotional. It's not because we read some new headline news or that we have a good stock tip from some friend. We're grounding this in the weight of the evidence that the market is giving us, that the market obviously wants to give us, and we want to take what market gives us, obviously. All right. With that being said, let's take a. I'm gonna stop sharing now the presentation, and I'm gonna share something. I'm gonna share my chart so we can come in and start looking at what obviously we're gonna be facing today. Let me just get this up. All right, let me see. All righty. If you can see my charts, go ahead and tell me. Let me know, please. Can you see my charts? Can you see my? Yes. Thank you, Goshen. Thank you so much. All right, fantastic. So, as we saw here, in this particular chart, I have the Bollinger Band applied. I have a moving average, a 50-day moving average applied to my chart, and I have the RSI. Okay, so let's take a look at what the consensus for today will be. Implied volatility to the upside, opening higher, looking to gain momentum. The market has really been in the London session compared to yesterday's session. It's quiet. It's not. Let me add actually here volume, because I wanna add volume here. All right. So there we have volume. It's important. All right. So taking a look at today's market action, and let's do we're going to be opening in about 7 minutes. So let's identify levels of resistance and support. So one tool that we can use, let's analyze yesterday's fluctuation into comparison to today's, and see if we are able to use that to identify possible levels of resistance and support. So using the trend-based fib extension tool, we're going to come in and say that our first level, I'm going to use, you can use whichever Fibonacci values are there. 50 is not a Fibonacci, but it's in there because it's applied. So I'm going to use 38, 20% for my first impulse wave to break, for the market to open and break to the upside. It's done some movement to the upside prior in the London session, but it's not that much. And then the overall target will be the golden ratio, that the 618%, which it sits at around 23,712. I have my resistance levels at 23,710. So that's how I identify my levels of resistance. Support, well, we're gonna retrace all of this movement, and when it comes to retracement, let's do this from the swing low to the swing high of today. Then we are able to identify, I'm going to use that 38% and the golden ratio, which sits right below yesterday's open. That's for the NASDAQ. Okay, so that's initially my ranges for today. Let's see how, if the market, when the market opens, will it surpass, will it hit those levels, will it find resistance, will it find support if it breaks down, will it penetrate those levels? What range are we going to have within the first half hour? We'll find out. Then we have here our movement for the S&P. So let's just use, again, those values. There we go. Retracement. How much retracement are we going to have today? All right, so 0.38 is right there. So I'm going to use a 50%. And then the second will be the golden ratio. Pretty tight range. But momentum to the upside is not fair. RSI is above 50. All right. Crude oil. Will that be today another day in the red? We'll find out. Crude oil open gap up today. It's been closed. It fluctuated to the middle, a bit higher than the middle of the body of yesterday's fluctuation. But I'm still a seller of crude oil. So let's see how much more of retracement can we see, speculate to have. Let's do that. If we do happen to break down, this is down. If we do happen to break down, then revisiting yesterday's low, crude oil. All right, so with crude oil, yeah, selling is, we are at a downtrend, defined downtrend, lower highs, higher lows, more than 2 consecutive days. So we basically have trading lower. And we've broken out of that psychological value 64. So we penetrated that value. Okay, that's something of importance that we want to be able to understand here. If this momentum to the downside is going to continue. So psychological values for support are going to be applied here today. Okay. So initially 63, 63,600, second level, 62,600. So let's see if that be the case. 65 resistance psychological, and then yesterday's swing high. So looking to sell. Let's see what will happen. Nat Gas. So with yesterday, it had a nice little run to the upside, but it was not sustained, and it closed in the red. We are now penetrating our levels. So therefore, 297 and 290. Looking to sell. 310 initial level of resistance, and the medium. Then 20 moving average. All right, gold. So 3,400. For those who have been following me since Monday, we spoke about seeing gold steadily moving higher, and that 3,400 was our target by the end of the week. All right, so markets are open. All right, markets are open. So since we have already hit our level and more, we actually hit both of our targets that we placed yesterday. I'm gonna leave what was the second as first, and then just use 3,420. Psychological values is what I'm gonna be applying. Then we have here, let's use the retracement tool. How much of yesterday's movement will it retrace? Can we add to this fluctuation? Yeah, we just add that, and then so the initial support is today's swing low, which penetrates our Fibonacci value. And then let's see if it's going to do a complete 100% retracement of that entire move. So anyhow, the market did open gap up. Okay, market open gap up. It's being closed. Now, after that move to the upside, are we going to continue to retrace? It is Friday. Profit taking obviously is in the works. So we could probably just be here sideways trading, churning, just a lot of shoppiness. Then we have silver. So our levels for silver weren't really met yesterday. But anyhow, let's update our level of support. So $38 psychological has been met. So I'm going to use around yesterday's open for my first level of support, and then 37.5 for my second. Copper. I've been saying copper is just idling, sideways trading within that range that it was created after that swing low. So breakout probabilities, since we are on the upper end of this range, it could break out, and fluctuate towards the 450. But I'm gonna leave the same levels that we have this week because they haven't been met. They haven't been even violated. All right, so Bitcoin moving strongly, making a nice parabolic movement yesterday, retracement today, profit taken. Let's see if the 20-day moving average is gonna hold. So 118 is gonna be our first target, 119 our second. Support, well, 116 is right there, 116,000. Well, that's gonna be, and then yesterday's swing low. I could speculation, this thing could just rocket, take off, or it could just plunge. But my assumption is gonna be sideways trading for the first part of the day, choppiness. All right, then we have the currencies, the euro, looking to sustain itself north of 116. That is for sure. So let's just use the 50-day moving average, leave that 116, 117. It was almost met yesterday, but today is retracing. The 50-day, the 20-day moving average and moving at the medium of the Bollinger Band is doing its work. We found support around that level. Then the pound. All right, so the pound is getting set to fluctuate above 135. So I'm gonna choose the extreme of the upper Bollinger Band as a possible level of resistance or our final target. 20-day moving average or the medium of the Bollinger Band is going to be our first level of support. And then yesterday's open around that level, our second level of support. 50-day moving average is below the market, giving it that dynamic level of resistance or support. And we could speculate another leg up. Let's see if it catches bid. Now, things could get better for the currencies and the metals if the dollar index decides to drop. It did open gap down today. Okay, it has been closed. 20-day moving average has rejected that zone, that level. So will it do another pullback and then fluctuate even lower towards the 97.5? If that happens, we will see a nice increment, a nice push to the upside on the metals and the currencies. Now let's go back now. Let's go into an hour and see how the markets are behaving. If we see identify any sharp patterns that could be of our interest to take a trade. Now, on this particular chart or time frame, we're seeing that the 20-day moving average has given support so far to the asset and is looking mighty strong to move to the upside. But again, we just barely, the market is barely open, so we want to be able to sustain it ourselves at least half an hour to identify range for today. But that swing high is still sustained. So let's see. I mean, this previous double bottom here could also be of interest. If the market decides to make a UE, well, we'll see if we'll find support again around these levels. But this could also just go ahead and just take off on us. Hourly, again, we understand in the hourly previous to the US session open, the market wasn't an uptrend. It did a pullback or correction, right? Profit taking. This is basically profit taking. Boom. It took out almost 4 previous sessions or 4 candles. Okay, it took out 3 anyhow. But that particular rebound from this low shows us that yep, the market is looking to sustain itself in a positive momentum. So this initially right here will be an interest of us to see the market will actually come towards it, fluctuate a little bit higher, then come back towards it, right? And then spike. That's it. Let me just move. There you go. Will it do something like that off of this initial, psychological value? 388, 6388. That could be an opportunity. But again, half an hour. The first half hour is just letting the dust settle. All right. 50-day moving average was penetrated in this particular time frame for the Dow. So will the Dow actually recover some of that lost momentum that it had throughout the week? Crude oil, strong move to the upside, now is looking to recover, but it is creating a coffin of congestion. It's basically creating a range. So let's see if it'll break out of that one. Nat Gas, whipsaw movement, but still the consensus is to sell. Gold, looking for it to recover. So in this particular time frame, 3,400 again is going to be our initial target. After that, as we fluctuate above those previous swing highs, we come into our first level of resistance, which is also our target. So let's see, silver. Yes, also look at the candles, right? So the volume, the strong volume here on this momentum. So will that be sustained? Then we have copper, nice move to the upside, broken out of this range. Okay, so will the market come towards our level of resistance, do a pullback, and then make another attempt to trade higher? Will it do that? That's what we want to be able to understand and see. Then we have Bitcoin, tall candles, low volume. Okay, waiting for participants to gather their notion, their direction. So the euro, again, looking to sustain itself north of 116. Let's see if he's able to close above 116 and a half to show us that momentum is being built up, and that will take the RSI above the 50, which it will indicate that, yeah, momentum to the upside is being gathered, is being built. Then also for the pound, we want to be able to close above that medium and take a trade to the upside, and things will happen to the upside if we see that the dollar index declines. I mean, it's basically doing equal highs, equal lows. So a breakdown. 98 is a psychological value. As it breaks 98, we'll see more momentum to the upside. Okay, then we have here the NASDAQ. Let's fall into 5 minutes because there's a lot of momentum moving here. All right, momentum to the upside. The Bollinger Bands had squeezed, volatility incremented, taking the market outside of the upper Bollinger Band. Now it seems that the market is taking profit. The top Bollinger Band will be our first level of now support. We could use that as a support level and see if the market will rebound from here or not. Will it continue to penetrate the bands and go back into level and find out support at the 50-day moving average, or will it continue to retrace and find it at the medium, or will it just now do another leg up? Let's see what we'll do in this 5-minute chart. So it's trading lower. Look at the volume though. It's very low volume. Very low volume. So basically that this low volume on this move to the downside is not being sustained. But if it was a stronger move to the downside, then you will see that volume increment. Okay, so basically now we have 3 minutes and 40 seconds left on this candle to figure out if the market is going to increment. Now let's see if in volume, when it reaches 23,460 around that level, will we see now it will be a nice momentum to the upside. 23,600 will be a target in this scenario. And let's see. So we still have 3 minutes left on this candle. 23,600 will have been that initial target, and it's been hit. It's been hit. All right. So 23,600 has been met. If you still on the trade, then 23,620 volume incrementing. Volume, if we want to see volume obviously continue to rise to sustain this move to the upside. So we're sustaining ourselves, we're holding, and then with 610 has been met, and 23,460 in volume is about to be met. So that's done. All right, so strong momentum to the upside. RSI has been taken out of, obviously, an overbought territory. 610 was met. We still have 2 minutes and left on this candle. 620 is our next target as we continue to increment in volume. So that will be our initial level where we could find that those sellers profit taking, they could step in and just profit take on that as well. So we're still moving along higher. 612, 611, pushback. Volume is still high. Strong pushback now. All right, let's take a look at other assets. S&P 6390. RSI is not yet in overbought territory. Pullback, profit taken. Upper Bollinger Band, possible level of support. Reversal at that level. Maybe not. You just continue to move higher or just churning along. Dow just tanked. It did make a pretty wild swings, but then just tank. Good oil. So nice pop to the upside. If you were to be bullish, aggressive, yeah, your target is the opening of the previous red candle at a 64.52. Nat Gas, sideways trading, set up for a possible breakout or breakdown. Gold. All right, so gold is getting. All right, so gold is picking is head above this period double top. Okay, so 3,400 again is going to be that target. Strong momentum, strong volume. RSI is not even close to entering overbought territory. So if you were entering now, you use your percentage wise of how much are you looking to obtain. 3-to-1 ratio is always good. It makes sense, 3-to-1 ratio, because you're looking to, let's say for example, you're risking $100 to make 300, and you're giving yourself 8 trades per day. That is your trade plan. That is how many trades you're looking to make, controlling yourself, your emotions. So in the worst case scenario, that let's say you do 50-50, you have 4 bad trades and you have 4 good trades. So you lost $400 on your bad trades. And if you actually did stick to your guns and made $300 per trade, you actually made $1,200. So you down, basically, you will be down. You're down to 800 because of you other 400 you lost. But still, you're up. And let's say, for example, that you actually had the worst case scenario, and in that worst case scenario, right, you only had 2 winning trades, and you had 6 bad trades, so you lost 600. And then on those 2 winning trades, you broke even. You recover your initial loss, and you didn't make any money, but at least you didn't lose any money, because those 2 trades at 300, that would have been 600. So you would have recovered. And for you to have 6 bad trades, only 2, obviously there's nothing wrong in your analysis. So looking at the other scenarios, or the probabilities that, okay, let's say for example you only had 2 bad trades and you had 6 good trades. Hey, well, that'll be $1,800, and you only lost 600, so you're up 1,200. So it's just about using that scenario and talking about your profit, your risk, limits where will you put your stop. So if you enter the trade, will you put your stop at that swing low? Will you put your stop? You calculate how much a 100 is, and then that's where you put your stop. So if you enter at 397, and how much $100 will be, how much lower would the market have to retrace? So all those things you have to obviously do. But this is about making money. So you need money. Money makes money. So you need money to make money. So initially 3,400 is our target. Now when we will reach that, obviously in this 5-minute chart, there's less risk. If you do a short time frame, there's less risk. Keep that in mind. Let's just hop along other assets and see what happening. Oh, silver. Silver moving higher. Oh, moving higher. All right, so towards our left in this chart, we have nothing that is gonna that previous movement could have shown us until this level. So will that be enough? So we want to say, okay, we want to be able to see if the market is going to continue to move higher, because 38,400 is a psychological value that you should be thinking about if you enter a trade long here on silver. So 38,400 for silver, 3,400 for gold, and we basically $2 away from the target. As far as copper goes, well, our first level of resistance, which is our first target, has been met and surpassed. Now we have the market pulling back, doing a throwback. It has rebound off our now support level, previously resistance. So am I aggressive enough to have taken that trade as a reversal, and my target will be that swing high? How much am I looking to obtain, to gain, to win? where would be my stop loss? That swing low, the previous swing low could be that place, but the market just seems to be retracing even stronger, and it could most likely will take me out at a loss. Because I was actually looking to take that reversal move of that support level, previously resistance. So would that have been the case? So if I had taken that trade, now that the market is looking to retrace deeper, and we are in overbought territory in the RSI, so is that something that I may be done here? Well, we started a new candle, and it started right there at the borderline, and it could probably bring us the RSI bring us back into neutral zone, but it seems to be that it's catching a bid for catching an ask, looking to do a push lower, and it did, and it took us out at a loss. Bitcoin retracing deeply, 50-day moving average. Let's see if that will be the place where this will change. Currencies retracing because the dollar is most likely having a push to the upside. And let's see, and it did. It is pushing to the upside. So gold, the 3,400 marker, is it going to be met? We're still, we're churning along. We are a dollar away from it. RSI is still not in overbought territory. So let's see. Has it just been that push higher? Do we have to, in order for us to have a winning trade, and if we are already making money, so should we be able to take some off as we earning? So let's say, for example, that you had entered this trade at the second candle, right? So you enter at 33.96, for example, and you're making money, but you say you want to earn, you want to make 2 times as much, but you entered, with a 0.10 lot. Well, you could sell 0.05 lots, half of that, cash that in, right? Or you could add if you're aggressive, and 3,400 is going to be met. So initially 3,400 psychological value, the market comes towards it. Is a hit does it have to be 3,400 right on the spot? Well, we were basically shy from it 19 cents. 3,400, and that's the overall, still the overall direction for it. Are we going to be able to hit that level, that marker? Once we hit that marker, what will the market do? Is the market going to retrace? How deep of a retracement can we speculate? In technical analysis, it is said that if a uptrend, a strong uptrend, is to be sustained, and that shows a continuation of this direction, that once it does a retracement or a correction, that the Fibonacci value of 0.382% is where we should expect the market to retrace from off. So it'll fluctuate down to that level, and then hit that it can be used as a level of support, and then rebound off of that level to the upside. All right, so 3,400 hasn't been, like, typically, like, by price hasn't been typed yet. I mean, it hasn't been 20 cents away from it. Ooh, strong retracement. I don't think we can get it on this one. We came shy of it by 3 cents. I mean, if we still have a minute, let's see. We still have a minute in this candle. Are we gonna be able to hit that marker in this candle? I mean, you're already making money if you enter way lower, obviously. So let's see. I'm just saying that 3,400 should be made within this time frame. If this momentum is strong enough. I could be wrong, but it's helping you sustain your entry. And 2 seconds, may not in this time frame, not in this candle. It may not be met. And the candle is about to be done. And in this candle, 16 seconds. Let's see what it will see, if it will sustain itself. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, and boom. All right, so this candle had a high of 33.99.97. All right, most likely in this scenario here, are we going to fluctuate above that? So let's say, for example, that we actually do something like this. The market fluctuates higher, penetrates our level, does a throwback. Does a throwback to what was a resistance, now support, right? And then from here, do something like that. So 3,400 has been met. Is it gonna do this? Hit that, pull back towards the opening, the closing of the previous candle, and then do another trajectory higher. So this candle closed at 33.99, 37. Well, it's looking higher. It's looking mighty higher. 402 is our next target, if that was the case. We have 401, 400, 401. Let's see. RSI still not even close to entering overbought territory. So that is something of positive news. Momentum to the upside, higher lows, higher highs. Nice trend, beautiful, beautiful trend line. I mean, how much perfect do you need it to be? You clone this line, have the same angle, and then just match the. So you will say that if this movement is going to continue to move higher, well, where is it directing us towards? 402. Okay, so we're seeing that nice little pullback. If it does a pullback, deeper pullback, is it going to come towards our trend line? Gosh, this thing won't. Is it going to do a trend line scenario like this? I wonder why I can't draw those lines. Okay. Let's see what will happen. Okay, we got 2 more minutes left on the session. So that's that. That's for today. Let's take a look again at the end and see where we are. Okay, so NASDAQ, we've hit our first level, 660 with this momentum. 6,400 for the S&P, the target. Dow, nice move to the upside, recovery. Almost, it's about to enter overbought territory. So can we do 44,280 initially, 320 before our levels? Now, crude oil, I was going short, but it seems to be looking to do a head fake first. Nat Gas, sideways trading, move to the upside. Gold, again, looking for that 410 by the end of the day. So that's our target. Then silver, sideways trading, taking some emotion out of the market here. So perhaps not too much of a movement to be in the weekend, being Friday. Copper has fluctuated above our level, first level of resistance, our first target. So let's see if it does attempt to do another leg up, 442 target. The Bitcoin looking to break out towards the 118. Currencies flattish, just sustaining itself, sideways trading, tight range. It could just stay like that all day long. Then the pound is losing ground. So 134,200 if it continues to move lower. But we want to see the dollar index just drop. That's the momentum that it had initially. So let's see if today we'll see. It did open gap up this candle. It's been closed now. But anyway. All right, guys. That's it for me today. Thank you for watching. I'll see you guys next Monday, half an hour prior to the US session open until Friday. Thank you for watching.